Welcome to this demo of the Taxpert Profit Extraction app 2023. This is the latest iteration of our salary or dividend or loan interest or rent planning application based on an Excel spreadsheet that will help you advise clients on the optimum way of extracting profit from a family company. And we've got, as you can see at the bottom, just 5 tabs. The profit extraction tab that I've got open on screen at the moment is the main input tab. As with all our apps, the yellow cells are the ones that you can enter data to. And we've also got the overview, the first of the tabs that just sets it up for you. Then click there to go back to that profit extraction one. And then for each of the years, because this profit extraction app covers the 2 tax years, 22-3, the year just ended, where you might be contemplating the effect of various decisions, and the current tax year, 23-24. So we have workings for each of those. I can click the workings button, and the workings show the detailed allocation of allowances, reliefs, savings rate band, personal savings allowance, dividend tax allowance, starter rate if you're Scottish, basic rate band, intermediate if you're Scottish, higher rate, additional rate, etc. Similarly for 23-24, which also I can see has got the alternative corporation tax computations that deal with the change in corporation tax rates. We're introducing a small profits rate and a marginal rate. And then the rates themselves are listed in the rates worksheet for both years with the rest of the UK, our UK, and the Scottish, and then which is appropriate side by side. Now, if I go back to the main input tab, we start, and let's suppose we're looking at it for 22-23, by inputting trading profits. Let's say we have 85,000 of trading profits, and I can then straight away see what the retained profit would be with no extraction of profit whatsoever. And that retained profit, by the way, gets carried through into the 23-4, which we'll look at separately. So retained profit brought forward and carried forward. We can then enter other income of the director. So if the director has got, say, some self-employment income of, let's say, 15,000 a year, maybe some rent of, I don't know, 12,000 a year, then those figures go in as well. And again, if I go to the workings, we can see how the personal allowance, the savings rate band, all the rest of it is allocated and dealt with. But the key field or the key application here is in this optimize button. And when I click on that, what will happen is that a solver application in Excel will then do its stuff. It takes a little while to go through its calculations, and it has now calculated that for 22-3, the optimum salary would have been 9,100, and that leaves 61,479 to come out as dividends. I've built into this an assumption that we don't want anything left in the company, so we're doing maximum extraction of profit. Now, before looking at 23-4, which may be of more interest to some, let me just see what else I can do. Here, as with our main Taxpert calculator, I can toggle between yes and no for state pension age. That'll have an effect. We'll see it straight away. On the NI disappears if you're already of state pension age. And I can also toggle between Scottish taxpayer and rest of the UK. If you are a Scottish taxpayer, press I, and you can see that increases the tax because of the Scottish tax rates. But let's go back to rest of the UK. That shows the main functionality, but let's now have a look at what would happen if I were to repeat this for 23-24. And what I can do here is put in, let's say, profits for 23-4 of £100,000. And I won't put in any other income because I'll keep it simple. I'm just going to reset 22-3 to 0 so that we don't look at it anymore. But if I've got 100,000 in the current year and no other income, I press optimize, and that then tells me that the optimal breakdown of salary is 12,570, That'll be familiar as the personal allowance, but also the primary threshold. And the dividend remaining would be 67,659. And that's what we might then advise a client to do. However, new this year, I've got this field for associated companies. At the moment, I'm assuming there are none. And because of that, we've got a tax liability at 19,292 on the 86,951. That'll be the first 50,000. If I go to the workings, actually, I can't remember where yes, I have got it in the workings. The first 50,000 will be at 19%, and tax on that 9.5%. But then the top 36,951 will be at 26.5%. So we can see the impact of the increase in not in national insurance, in corporation tax rates that's come in this year. But if I then change the number of associated companies, we'll see a change in the tax calculation. Let me in fact reset to 0 so that you can focus on that. If I put in that figure of 100,000, and we can probably appreciate this in a more straightforward way, the 22,750 will be 50,000 at 19% and the other 50,000 at 26.5%. But if I had, let's say, one associated company, then that 22,750 goes up to 24,625. And that will then affect the dividends that can come out. I don't think it'll affect the salary. If I press optimize on that, then I need to click OK to get the sort of a figure in. Yes, we've still got the same salary, but the dividends will have gone down because the corporation tax will have gone up. If I had, say, 8 associated companies, actually, it doesn't make a huge amount of difference there, but you can see the additional tax will have been 571. So that's more or less what it does. What we can also do, and let me just put in some figures again here. Suppose that last year I had 150,000 and I optimized that and took the salary of, in this case, interestingly, 1662. There'll be a good reason for that. I'm not going to explore it now. But if I were to have a salary of that and the rest as dividends, my net income is going to be 90,864 down here. And there's a little button here, equalize. What I can do is determine what the dividend required would be if I'm to get the same income in 23.4. And to get that same income, it's, of course, I should have realized that. I've increased the profit 150 against 100. I'd actually need a dividend of 112,251, which would give me negative reserves. So I couldn't do that. But anyway, I've demonstrated what that equalize button can do. And I think apart from this MPV factor, you can change that. That takes into account the retained profit if you were to have some. So let me just demonstrate how that would affect it all. Reset everything to 0. Let's have 100,000 in the profits in 23.4, and let's optimize that figure again. So that then gives us the figures of 12,570 salary, 67,659 of dividend, and the change to the net present value, if I were to change that to a rather more sensible 15%, I'm on the wrong field to change it, that goes to 15%, and that, in fact, I see it has the total net value down here doesn't change from 66,907 because there's no retained profit carried forward. So let me actually reduce that dividend to just 20,000, and that then gives me retained profit of 47,569. The total net value takes account of the discounted present value of the retained profit. So now if I change that 15% to say 10% as a net present value factor, we should see that 38,056 change. Indeed, it goes down to 35,673. That's a bit of a sophisticated element to it. And if I have a factor of 0, then we go back to the same as the net income for the director, including the retained profit carried forward. So play around with it. Quite a lot of stuff you can do with that. And as usual, you've got full backup in all the workings to check that it's okay. And if in doubt, put the figures through the Taxpert tax calculator, and that'll show you how those figures are derived, and also whether HMRC agree with the tax calculations. If they don't, the chances are HMRC are wrong and I'm right.